Let's now discuss some auto sales. We have Bajaj Auto sales, which flashed on the screen a while back. Slightly below estimates, actually. The total sales are down about 2%. And that's mainly because while the domestic two-wheeler sales have been up 28%, there's a big decline in exports, 33% down at 1.25 lakh. We have Rakesh Sharma now joining us, Executive Director at Bajaj Auto, to discuss this. Rakesh, good morning. Is this the Nigeria factor which has played out and any sign of improvement here?
Morning. You are right. Nigeria is certainly one of the factors, but you know that the environment for international has become rather choppy in the last 2-3 months, and things have taken a very sudden movement, I would say, about July onwards, and largely led by the moves by the Fed in the US, which has sort of strengthened the dollar against emerging market economies, making the currencies devalue at figures like 20-25%, so which unleashes an inflationary trend. And more than that, the availability of dollar for international trade has reduced. And we are seeing this not just in Nigeria, but we are seeing this in South Asia, Bangladesh, big devaluation, Nepal, Egypt, severe dollar crunch, and almost entirely across Africa. So the outcome is a quick adjustment done by us to ensure that, to take the prudent approach of ensuring stocks on the water and in the markets are brought in line with the expected retails, which for some time I think will be lower than what we were experiencing in Q4 of last year and even in April and May this year.
I remember asking this Forex question, discussing this with you last time you were on the program. Maybe things have turned out to be a little more severe than expected. Mr. Sharma, hi, good morning. Prashant here. Nigeria is between 15 to 20% of your overall volumes, right? Could you give us a sense of, what total volumes in FY23 so far to Nigeria have been and how they compare, how much down are they as compared to full year 22 volumes?
Well, without going into exact volume country details, but suffice it to say that the African business is rather down by about 20-25%. It's a major contributor to the decline in exports. But, the good thing is that we faced the most severe issue in Nigeria in the month of August, and the September retails have already started to show a rise. But like I mentioned just a few minutes back, what happens is that it's very important to reduce the exposure in stocks for our partners. And what you see is also a reduction in caused by leveling out the stocks. So in Africa, I would say I'm a little bit heartened about the second half performance of the retail market in Nigeria. Not back to the old levels, but the 20% odd declines have already started to taper off to about 10%, 15%, indicating that some kind of acceptance by customers has already started to take place. But it's early days. I would like to watch it for another month or so before sort of feeling absolutely comfortable.
So for the full year, you mentioned this Africa, but Nepal, Bangladesh, etc. For the full year, Bajaj Auto exports should be down how much for the year compared to 22? Double digits?
Again, this is a combination of a performance in 70 countries odd. And the world at this stage has got a very varied impact of the macroeconomic stuff which is going on. So I would say that certainly Q2 has been below our plan, and Q3 is also going to be below our plan. But on the basis of information we are picking up at the retail level, in case there is no further sort of volatility in the currency markets, I would say the equilibrium would start to return certainly by Q4. Stocks would be in healthier shape, and we should be getting back to what our original plan for growth was in Q4. But I doubt if we will be able to recover what we have lost in Q2 and what we may sort of lose in Q3, which will be lower than what we lost in Q2.
Okay, so that's on exports. Got your point, and as I said, maybe the September retail in Nigeria is already showing improvement, but this is going to remain volatile, is the gist. What about domestic sales? There you must have much better visibility, right? What's happening here in terms of market share? How are things moving? Because we've seen, for example, Royal Enfield sales have been really moving at a scorching pace. Your domestic sales, how do they look going forward? What's the outlook?
Well, at this point of time, I must say that the September outturn has been excellent for us. We went through a little bit of a dry patch, largely because of ECU shortage which lasted till August, September. We're still facing a little bit of shortage, which is impairing largely our three-wheelers and some very, very high-end bikes. But mostly, we have been able to replenish the channel stocks, and our retails are moving up smartly. The market share which had got eroded because of supply chain shortfalls has now, by end of September, on the basis of Vahan, we are back to what we were pre this kind of a level. So that's an excellent thing. The industry retails, as we are reading it, is also showing promising for the festive season, from a period when in Q4 industry was declining, and I'm talking of retail, I'm not commenting on billing by the companies, but registrations. So the industry, which was declining double digit in Q4, had sort of narrowed it down to single digit decline in July, August, has in September, and particularly in second half of September, and particularly in the last few days when the festive calendar has kicked in, is showing a single-digit growth. I think this is going to expand. Within that, the entry level is suffering a lot still. It is still in major decline. But if we cut the domestic industry into 125cc and above, the 125cc and above is showing a really, really healthy uptick. And you just have to compare the data for the last 3 years. You will see that this segment, which was the 125cc and above, which was about 40-41% of the industry, has now moved to about 60%, 58 to 60%. Sorry, about 55%. So that's almost a 10 percentage point movement, which is showing that the upper end customer is returning to the purchasing ways much faster, and the entry level customer is still having a problem.
Entry level. So I'm going to just again trying to. What would full year kind of change look like year on year? Could you give us some sense on the domestic side, sir?
Last couple of years, we've stopped looking at this full year business because it's kind of crystal ball gazing is not doing any good. The only place where we are sort of planning, we don't have an issue with capacity, but it's really the product development side which is looking at 1 year, 2 years, 3 years, 5 years down the line. But in terms of sales and business, we are managing from month to quarter because we find that there are so many forces which are very temporary, and but when they are in play, they are very intense, and so we have to manage for them. But it's a good sign that the festive is showing promise. But previously we have seen that immediately post-festive, there is a decline because there is a sort of a reshaping of the consumer behavior. It starts to get more and more bunched nowadays compared to before during the festive period. So we will take it as it comes, but it's looking like after a long time, the two-wheeler industry is returning to some kind of a growth environment.
When should we see that electric three-wheeler product from you, sir?
You asked me this question last time onwards also, and I told you we were the first off the block. We have launched the electric scooter Chetak a couple of years back, and it's doing rather well. We've had a good month. It's as per plan. And going forward, in the next 12 to 18 months, you will see an expansion of the portfolio.
No, I meant the three-wheeler, sir. Three-wheeler.
Yeah. So the three-wheeler is.
I was reading that the electric three-wheeler segment has kind of the growth rate has surpassed the ICE three-wheeler segment in terms of just the pace at which the segment is growing, and Bajaj doesn't have a product yet there. So just asking that.
Yeah, sure. You see, the growth rates are not something because it's at a very, very small base, so there's no point looking at growth rate. But you're right in pockets, particularly where there is government support. Because otherwise, for a commercial application, the economics on the CNG three-wheelers is still, the economics is loaded in favor of the CNG three-wheeler. So the case is not very strong, but still, irrespective of that, every month, you're right that the three-wheeler, electric three-wheeler is growing and increasing its volumes. We are, our electric three-wheeler is actually under test and has been put in a few markets. And, we are addressing the particular anxieties which customers have brought to our notice. We have been talking to auto rickshaw drivers, and after the introductions of by the earlier introductions, particularly in Delhi, which is given permits only for electric. Delhi government has issued permits of 4,500 for about 6 to 9 months now, but nobody has taken them up. I mean, there's a trickle. Only 400 units have got sold. So why is it when a government is supporting it, not allowing any other three-wheeler, but still the uptake is so small? So we've gone and met the drivers and everyone as to why are you guys not buying three-wheelers, electric three-wheelers? And there have been a few things which have been pointed to us. We have made those adjustments and we are testing so that when we come into the market, we address these anxieties, and wherever government is creating space, we rapidly move in and start to service the customers.
All right, Mr. Sharma.
So I would say, by January or so, we should be
out with
out
with the product. Thank you very much and look forward to it, sir. And it's always a pleasure having you with us here on the program on CNBC-TV18. Thanks indeed. Well, Federal Bank is the next management we have waiting by. They've seen an outstanding business momentum in the second quarter. This is, of course, the pre-quarterly update which comes out. Deposit growth is the best in 6 quarters, while year-on-year loan growth is the best in 16 quarters. We have Mr. Venkateshwaran, CFO at Federal Bank, now joining in to take some questions. So thanks very much. Great to have you with us here on the program. Thank Prashant this side. Could you, so this is very strong momentum that we've seen. Could you tell us on the asset side, which are the segments, pockets which have done very well?
Yeah, good morning, Prashant, and thank you for having me on the show. I will speak about what we have disclosed to the market, because given that it's closed period. So in terms of momentum, we have seen the credit growth pretty strong, carried forward from Q1. We have seen a broad-based growth in the advances side across segments, Prashant.
But could you be a little more specific, which, what buckets, without, of course, specifying or going into details? Yeah, that we'll leave for the results, but yeah.
That's right, that's right. It's across segments, like I said, both the retail and the corporate commercial banking segment. Across products, we have seen very good double-digit growth quarter on quarter. And it's in line with the guidance we had given at the end of Q1 as well. We expect to see the advances grow by 18 to 20% for the year.
Okay. Mr. Venkataraman, good morning. So in terms of corporate loan book, how's that playing out? I mean, we've gone through a period of deleveraging, but how are things looking now?
Yeah, morning, Anuj. In terms of specifically corporate loan book, if you look at the top end of the corporates, the pricing is still very fine, and the liquidity is still pretty strong at that part of the market. But if you go notch below, and then in the commercial banking segment, you do see a lot of opportunities to grow the book at I would say, a better pricing opportunity as well. So the top end is still very, very, in terms of fine pricing.
Mr. Venkateshwaran, good morning and thanks for joining in. I was speaking with a couple of auto OEM manufacturers, and they indicated to me that going forward, because of rising interest rates and higher inflation, consumption demand could get hit quite a bit. Would this slow down retail loan growth, you think, over the course of the next 6 to 12 months? Is that a legitimate fear?
Yeah, we'll have to wait and see on this particular aspect. As we see right now, the momentum into Q3 is pretty strong with the festive season. Of course, it depends on a lot of external factors as well, and things can change quite rapidly with the dynamic global situation. But as we see things, at least the next 2 quarters, we should see the demand growth being quite robust. We'll have to wait and see what impact the rate hikes have on the consumption side.
And what about the SME portfolio? Are you seeing an increased demand there with lower slippages? Because that portion got hit quite a bit, right? Especially in the pandemic years. How is the situation on ground now?
Yeah, the SME specifically has come out quite strongly, and all the support which they got during the COVID period has been, I would say, well deserved, and we are seeing very good performance in that segment, and the growth in that particular book is also quite robust.
Okay, all right. So that's on the SME portfolio. Tell us a little bit about the credit card business as well. The momentum has been quite strong this time. For you, what's the outlook on what the growth could look like over the year?
Yeah, as you know, we are probably a late entrant. We have just entered into the credit card segment less than a year. Now we have our organic sourcing, as well as we also have a tie-up with the fintech FPL, where we do credit cards. The growth, since the base is small, let's keep that in mind. The growth is very good, good momentum, and we see a lot of scope to increase the book in that particular, both through the organic and through the partnership route.
Okay, we'll leave it there today, sir. Thanks a lot for joining us. That's on Federal Bank. Well, let's look at the market once, because it's really all over the place, and just so much volatility already within the first 45 minutes of trade. The Nifty is now down about 67 points, but the broader market is doing well. The mid-cap index is in the green, advanced decline, favoring advances, and really ONGC is your stock of the day. Both factors working here, the gas price hike and the fact that, the windfall gains tax has been cut. And the other sector which is making a big move is pharma. Just look at names: Glenmark Pharma, Lupin, Aurobindo Pharma, Zydus Life. Now, from the market's point of view, that's not good, because, it just means that, all of a sudden you're beginning to make a bit of a move towards defensives. But Lupin clearly stands out. For the last 2 days, there's been some strong rally in Lupin. So, yeah.
Oh, absolutely. All right, so that's on Lupin and the pharmaceutical space. But the consumer segment is in focus right now. How is the consumer sentiment panning out post the monsoon season and ahead of Diwali? Mayank Shah, who's the senior category head at Parley Products, and Puneet Avasthi, who is the senior executive director, Specialist Businesses Insights Division at Kantar, joins us now to talk about that. Mayank, let me start with you. The festive season has kicked off with a bang for sure, but how is the consumption pattern looking like on the ground?
As far as consumption is concerned, I think it's pretty robust demand that we are seeing coming in from market. In fact, if we are talking about urban markets as well as rural markets, I think a very heartening thing is that demand is coming from across. Rural markets, which were a concern till last year, have revived, and there's a very strong revival of demand happening in rural India, which is adding to the growth. So if you're talking about the festive growth, we are seeing very good festive growth after 2 years of muted celebrities or muted celebrations of festive season. So this year seems to be really, the one where we're expecting people to go out and, buy, in fact, celebrate going all out, given that the pandemic is on a wane and with very high levels of vaccination, I think consumers are very confident. They are going out, they are spending, and we are seeing very, very strong demand coming in. In fact, right from the beginning of the festive season, which typically starts with Raksha Bandhan, we have been seeing very strong demand coming in.
Okay. Puneet Avasthi is also with us. He's from Kantar. Puneet, tell us a little bit about the consumption patterns now, because we do, when you speak to experts, you get a sense that the new age essentials, whether it's mobile phones, electronics, etc., has picked up in a big way. There's premiumization as well. What are you noticing?
So I'll specifically talk about rural markets, and then I'll come to, in general, how things are evolving. But in rural India, what's clearly coming out is that the incomes too have gone up with inflation going up. Income too has gone up. And as a result of that, there is a certain modicum of comfort that people have in the rural economy. And I think towards the middle of this year, things were a little worrisome as such, where consumer had started cutting down on spending. But since then, we believe because of the surpluses that are there in rural India, consumer spending is going to kind of bounce back. And what we're seeing is that consumers are spending in rural India across the board. They are spending on electronics. They're spending on equipment and kitchen. They are spending money on construction activities. So it's a fairly broad-based expenditure basket that one is looking at. But at the same time, the inflationary situation needs to be watched and needs to be constantly be kept track of, because things are a little uncertain as such. People do have a sense that the economy is a little unstable, whilst the personal economic financial situation is not as much affected.
Puneet, one feedback we had, especially when you mentioned kitchen appliances, etc. I remember we had the management of TTK Prestige who told us that entry-level pressure cooker segment, which is about 60% of their business, was stagnant. I mean, this is now a month old. The comment which the management of TTK made to us. How would you explain that, characterize that, and the data that you have, is it as of the end of is it how latest is this data? One other segment in mobile phones, what we've seen is that people are upgrading, right? People who are buying entry-level smartphones, are buying slightly more expensive phones. That is the evidence. I saw some data recently from one of the research firms there. So just kind of tie both those things in. Is that happening across the board? People are kind of going up the value chain, trading for higher priced products? Go on.
So consumers are actually in the rural context going for smartphones as such, because they're clearly seeing the benefits of connectivity, being able to access internet, and there is that much stronger growth in internet consumption in rural India altogether. What's happening in rural is, with electrification, the kitchen is being modernized with a lot more electric powered equipment as such. So whilst the LPG systems as such were there, people have realized that it's probably more effective if they were to invest in electric powered stoves, etc. And that is where the investment is happening. And I guess with the kitchen being a focus, and particularly in light of the fact that women have a stronger role today in rural purchases than, say, around 5-10 years ago. So that is something that is changing the kitchen, and I'm sure things will pick up even for the pressure cooker industry. But electric appliances, yes, there is a growth.
Mayank, come in on this, on rural India. How has the demand been for, say, smaller packs or even for premium products? Where are you seeing the maximum amount of demand come through?
So it is indeed the market has moved towards smaller packs, but Mayank would know this.
Sorry, this question was for Mayank. Yeah, Mayank, go ahead.
Yeah, so we're seeing very good demand coming in from rural, both on small as well as big packs and even premium. So when I shared earlier in my earlier answer that there's strong demand coming in from rural, Puneet partly touched upon it. He said that, the income level is on rise. And a very important reason behind that is good realization of Rabi crop. So if you all remember, I think Rabi crop was good. the one which was harvested in March, April. And then because of the geopolitical tensions, farmers got very good realization of wheat. Government banned the exports of wheat a little later. By then, I think, farmers had sold their produce and they had got excellent prices for their produce. That was one of the reasons why, because of, better produce as well as better yield. In fact, we had good production happening of wheat this time. As a result of that, I think farmers had enough money, primarily in rural India. Add to it good monsoon this time. I think, there was a bit of concern on the northern part, especially UP and BR, but there too, monsoon made up towards the fag end of, monsoon, or rains made up for the deficit made up for towards the fag end of monsoon. As a result of which, farmers are optimistic even for the Kharif season coming up. They are expecting good crop here as well. Given this, I think, the spends happening in rural are much better, higher compared to the earlier times. Add to it the festive season, all these things putting together, I think we're seeing good demand in rural. As you rightly said, I think not just small packs, in fact, we are even seeing big packs being purchased in rural, and premium products are also doing well. I mean, this is not a normal thing. Normally, you would expect smaller packs doing better in rural and maybe few categories. But currently, we are seeing across the board growth in rural, primarily because of the reasons that I just shared.
Okay. Puneet, I wanted your thoughts on this whole online and D2C channel, right? How much has it improved? Because I don't remember the last time I stepped into a grocery store. Everything now is being purchased online, especially FMCG. So can you tell us what is your data indicating now in terms of a growth there in e-commerce?
So e-commerce is one of the secular trends in terms of growth over a much longer period, and the pandemic really accelerated something that was in any case a very strong and deeply entrenched trend as such. It was very strong in urban markets, but we'd also realized that e-commerce was in a sense a leveling of the distribution divide by making products available to people who were not able to access some of those products earlier as such. And that is something that is kind of getting extended now with better rural connectivity. There is going to be that much more, and we are seeing that, and there is greater digital inclusion that is today visible in rural India, when many more people kind of accessing financial payments, digital payments in rural India. So overall, e-commerce per se is kind of deepening its reach across the country, and within that, the D2C phenomena is quite a strong emergent phenomena, particularly in select categories that require consumers that require a more differentiated experience. Often, there is increasingly the urge to seek a more differentiated experience even whilst they are shopping on e-commerce, which at times marketplaces are not able to reflect as well. And that's where D2C really comes in, and it's kind of been very effectively been doing it in categories such as beauty, cosmetics, and a whole host of such categories.
All right, gentlemen, thanks a lot for joining us and taking us through this discussion. The market, by the way, is now at the low point of the morning. The Nifty is down 135 points, and the Bank Nifty has taken a turn for the worse, and that's led to this last bit of decline. The Bank Nifty is now down full 1 percentage point. Remember, on Friday, the Bank Nifty was up 3%. So it's given up 1% of that. Almost 1/3 of that rally is gone. We'll take a break. Up next, we'll get you fresh technical calls. Shrikant Chauhan will join us for that. Stay tuned. Welcome back. Like I said, the market is at the low point of the morning, and a lot of stocks are under pressure, which is why you're seeing this decline. Infosys, Lever, Kotak Mahindra Bank, these are few prominent names which are down right now. ONGC, of course, still stands out on the upside. ITC is down, L&T is down. Shrikant Chauhan is back with us. Shrikant, not been a good first hour after that initial resistance of first 5 or 10 minutes, or resilience of first 5 to 10 minutes. But how do you approach it incrementally, and your stock calls? Shrikant? Yeah, go ahead.
Yeah, sorry. I was actually listening to the conversation with Kantara and Parley products, so sure. It was nice. Anyway, the market was like in the morning we saw a higher opening, but again now the market has has started its correcting phase, and it is correcting back to the levels of 16,900, where the market is having excellent support. So we are expecting market to consolidate till the second half of the market. After maybe Europe opens, the market will take the real shape. Otherwise, we are expecting further more activity in mid-cap companies or maybe small-cap companies in the broader market. Large-cap stocks are not at all participating. But the interesting part is that FMCG stocks are correcting from their highs, which is a little bit unusual because I was expecting some more activity or upward activity in the FMCG companies, but they are correcting back from their highs. So in that, Britannia looks weak. We should be on the selling side for the Britannia at 3790, 3795. Very clearly, the stock can fall to the levels of 3700. We can keep stop loss around 3830 for the same. And the other stock which we like is on the buying side, it's BHEL, Bharat Heavy, which is forming some reversal formation on weekly, monthly basis. And also on a daily basis, the stock has crossed its crucial level of 60. So from here, we are expecting stock to move towards 66 or 67, which is decent upside from current level. It's a buy at current level with a stop loss at 58.
All right, thanks a lot for that. Have a great day, Shrikant. That's Kotak Securities with their views. Let's shift focus now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
Sonia, thank you. Actually, the commodity markets have opened on a firmer note today. So whether it's energy, precious metal, base metals, all of that is trading on a stronger side. But I'm talking about the industrial metals, which have opened on a firmer note for the month of October. We understand that for aluminum and zinc, those kind of metals, the smelters in Europe have cut nearly 50% of production capacity. And it has been a demand as a concern, but that seems to be picking up now and is the reason you are looking at some premium building back in case of prices. So the short positions clearly are getting closed here. Same is the case with zinc, where we have seen prices gain up by nearly $200 from $28 to $3,000 per ton in the day today. So it has been good gains in last few sessions there. Aluminum prices also have been surging up. We've seen 17-month lows in the previous quarter itself. And from there, because of the tight LME supplies, there is some support coming back here. But the best of the gains clearly have come in case of copper, where there is restocking, rebuying from China, especially ahead of their holidays. That has been supportive. Remember, China is shut for its national holidays and opens only on 7th of October right now. But when you look at the Chinese copper imports for the year until now, they have been up by nearly 7.4%. Also, there is a report from CRU which suggests that the kind of Chinese demand that we have seen will only improve going forward. So their expectation is that in third quarter, we saw demand go up by nearly 5% for refined copper there. In the next quarter, it will only get better. So if last quarter was 5%, the fourth quarter could actually be looking at nearly 9% of a demand going forward. When you look at inventories, those are also supportive as a factor. In China, the inventories are at a record low of 1.18 lakh tons, and on LME warehouses, even lower at 1.71 lakh tons, which is just about 2.5 days of global consumption. So that is where the support is coming in from. As I said, the month of September and the previous quarter hasn't been so great. We've seen a constant decline in both ways, and the major declines really coming in for something like zinc and nickel. Copper in this case also has declined the least, and copper is something that everybody seems to be betting on right now on the longer side.
Okay, well, thanks a lot for that. Let's move on now from the metal space to the gas space. MGL is down over 4% in trade. If you're wondering why, Sonal is here to give us more on that. Sonal.
Thanks a lot for that. Well, apart from the gas price hike that came over the weekend, there's an additional update as far as MGL is concerned. PNGRB has ordered MGL to pay pipeline tariff for the Uran-Trombay line, and this is as per approved date from 1st of Jan 2014. Now, it was an ongoing case going on with ONGC and MGL, and the company had already provided for it as a contingent liability. Now, this is to be cleared within 2 months, after which they will have to pay interest on this particular demand. The demand was disputed multiple times by the company earlier, but this time it seems that they finally will have to pay this amount, despite they going ahead and forming an appeal for this particular demand. As per company's notes to accounts, total demand from November 2008 to July 2021 stands at 332 crore rupees, and this implies an impact of 33 rupees per share. And analysts say that the recurring impact could be 1.5 to 2 rupees as far as their EPS is concerned. But remember, this is a one-time impact on the company if they pay this amount. However, company sources have told me that they will contest the order in higher courts, but for now, they will have to pay it, is what the sources are telling me.
Okay, thanks a lot for that. So that's in Mahanagar Gas. But Coal India is also surging in trade today. The company recorded growth in its coal production during the April to September period. Nigel tells us more about that. Nigel.
Well, that's right. For the past quarter, actually, the production numbers look quite healthy. They were in double digits. Though on the offtake front, well, it was up close to 100%. But keep in mind, it's on a relatively higher base. And in a monsoon season where you do close to around 49 million tons in a single month, the street likes that quite a bit. As you said, for the first 6 months of the year, things have looked up. Production numbers up close to around 20%, and the offtake numbers up by close to around 8%. In terms of their targets, well, the offtake number is nearly around 102% of what they initially sought out, to achieve. So they've done better than what they estimated on the offtake front. And on the production front, they stay, focused on that goal of around 700 million tons of a production target. So far, they've done close to around 43% of their target. And the second half of the year, as we always know, is a better year. So we get higher volumes in that period. So all in all, it appears the street likes it. Only factor you need to keep in mind on is the street was buzzing that maybe there could be a potential OFS from the government. There is no confirmation of that, but that was something that was weighing on the stock. So track that as well. Back to you.
Okay, thanks a lot for that. We'll slip into a quick break on that note. On the other side, our special segment, it's the economy. Lata will connect with Somshekhar Vemuri of Crystal Ratings and Jitin Makkar of